This stock ripped 55% in just 5 days. And at that point, I was a bear. Then it gave almost all of it back and I called it wrong. Now, I am a bull. 12 months ago, Oracle ran from $220 to nearly $350 per share in just 5 days. At that time, I was a bear telling you to stay away. Today, it's back at $128, a 370 billion market cap, a 2 to 3 year low, and it's erased almost the entire AI rally. Right as if AI and cloud business is firing at its brightest. And I'm here to tell you I was wrong. Last video, I told you to buy fear instead of facts. This is the cleanest example on the board right now. So today, we are going to run through Oracle's bull thesis while not ignoring the risks at hand. By the end of this video, you will see why BlackRock owns 20 billion of Oracle shares, why Vanguard owns 16 billion, and why Ken Fisher just bought 300,000 shares, and why I think Oracle can deliver a 3 to 5x from here in the next 2 years. Now, can your S&P 500 index fund match that? So guys, moving into the bull thesis and why we really like Oracle, the first reason that we're going to look at, and the thing that changed everybody's mind, the backlog. So let's look into it. Right guys, looking at the earnings report here, Oracle calls it RPO, and it's the single most important read. That is contracted revenue that's signed, but not yet delivered. And right now that number sits at 638 billion. So back in September 2025, when Oracle first disclosed its backlog at 455 billion, the stock hit $350 per share, right? For context, today that backlog is bigger by 183 billion, and the stock is trading at a third of the price at just $128. So it's the same company, a bigger backlog, but a lower price. And that's the whole thesis in one sentence. And guys, here's what nobody is talking about, okay? Because Microsoft, Google, Amazon, these guys all have backlogs. Microsoft is worth 7.6 times more than Oracle based on market cap. And its RPO of 627 billion is actually less than Oracle's backlog of 638 billion. For context, Google has a backlog of 468 billion, Amazon 364 billion. Oracle is at a fraction of these market caps and has the single biggest contracted backlog across the Mag 7. And guys, just looking at the full year earnings here, what I want to put into perspective is Oracle's full year revenue came in at 67.4 billion. Okay, this backlog alone is basically 10 years of untapped revenue already signed. It's not speculation, that's signed on paper and will be unloading from 2027 onwards. So guys, reason number 2 we absolutely love Oracle right now is in the growth and its margins put together, okay? So what we discussed here, you can see the cloud grew 39% year on year. And this is above cloud with Microsoft, with Amazon, not quite Google, but you know, comparative levels. When we look at it in the latest quarter, it's growing at an even more alarming rate of 47%. For context, I think Amazon AWS has grown at 29%, Microsoft Cloud has grown around 28 to 30%. So this is more aggressive growth. And its gross margin on the cloud business is coming in at 75.6%. Now, Oracle is growing nearly twice as fast as some of its rivals from a smaller base, of course, but at a premium margin too. And these are margins and growth profiles that we feel is not being rewarded by the market right now. And guys, with that, where the growth is coming from is called multicloud, okay? So Oracle's database running inside Amazon, Microsoft, and Google's own clouds. And this grew 1,500% year on year. So taking a quick look at this, multi-cloud database revenue from Amazon, Google, and Microsoft grew at an incredible rate of 1,529%. The interesting part about this is they are saying that Oracle's AI database enables our customers to use their large language models of their choice, be it Google's Gemini, OpenAI's ChatGPT, and xAI's Grok. So guys, essentially what this means is Oracle's biggest competitors are actually paying Oracle to run Oracle inside their data centers. They're building 72 of them together, and underneath all sits a legacy data business and an ERP business that ran margins from between 79% to 81% for years. And this is the legacy business that continues to generate high margin recurring revenue. Now guys, reason number 3 answers probably the biggest bear argument out there. And that is that Oracle is a one customer company hooked to OpenAI, right? And you can see here that Oracle, they have OpenAI, they've signed a deal with them for 300 billion, and that factors into the 638 billion in the backlog. But what we also see is, as we said there, the multi-cloud revenue with Google, Amazon, Microsoft, and now we are also seeing them agreeing partnerships with AMD, Nvidia on the supply side as well. So to put that into context, look who else signed in last year. We have Meta, we have Nvidia, AMD, XAI, TikTok. Last quarter alone, Oracle inked new multi-billion-dollar deals with Meta and Nvidia. On the supply side, it's partnered with AMD to deploy 50,000 MI450 GPUs on top of Nvidia's new Zetascale 10 platform. Okay, so Oracle is diversifying its customers and its chip supply at the same time while still growing the backlog. So on that basis, I believe that we have debunked that Oracle is a one company, one trick pony. No, it has a connection and a network that expands way across the AI industry. And guys, another reason I am bullish on Oracle is who's actually running this company now, okay? In September 25, Safra Katz moved up to executive vice chair, and Oracle named Clay Magork co-CEO. Now, the reason this is important, that detail really matters, because Magork came to Oracle back in 2014, straight out of 6 years as a senior engineer at Amazon. He built Oracle Cloud infrastructure from scratch, became president of OCI, and now he's co-CEO. So essentially, Magork came along, built the world's biggest cloud in Amazon AWS, and he is now behind Oracle's push to compete with AWS and outperform it. And what we like about this is that's not a random succession pick. It's tailored, it's isolated. They've went and they got the best guy in the industry. And he is at the backbone of building out Oracle's OCI cloud infrastructure. He's done it before with Amazon, with AWS, and he will do it again with Oracle. And I fully believe it will be successful again. Larry Ellison owns 40.6% of Oracle, over 1.15 billion shares. His net worth is almost entirely in this one stock. That's why it swung so much by roughly 250, 300 billion in, over the last year, and briefly making him the richest person in the world. That means he could diversify out of this at any time, at any size, and he decided not to. The person with the most information and the most at stake is maximally positioned here. And what we really like about it is Elon Musk, when he was asked who's the smartest person he's ever met, he named Larry Ellison. When the founder still owns nearly half and hasn't sold, I'm inclined to listen. Now guys, that's the bull case. And let's be fair to the other side, because if I only showed you the good news, you shouldn't trust me. So here's what could break this thesis complete. So guys, as some of you will be aware, there is a bear case around sort of the layoffs that Oracle have incurred over the last year, okay? Oracle have cut between 21,000 to 30,000 jobs. But guys, the honest answer here and how I look at it is those layoffs and those cuts free up to 8 to 10 billion a year in cash flow. And that cash flow can be aimed at the AI build out. So this is more so a redirection, not a decline as the market is looking at it. Yes, in summary, this is a risk. Guys, what else are the bears pointing to? Look no further than free cash flow going deeply negative. So here we can see Oracle's strong operating income translated to record operating cash flow of 32 billion. That's up 54%, but the problem is with Capex, free cash flow was negative at 23 billion for 2026. Now, Oracle is funding this debt, not with its own cash. And that's where the investors losing the optimism around. They are taking on debt, they are issuing bonds. And the problem here is Google, Amazon, Microsoft, Meta, these guys are all issuing debt and raising capital for the same AI Capex race. If we look at it here, Meta sells 30 billion of bonds as AI frenzy fuels record orders. Google released a rare 100-year bond with different multi-currency debt and paying a coupon of about 6% a year. We've never seen the likes of this, maybe once before, a 100-year bond. And then Amazon had a 25 billion surprise bond sale, which surprised and sort of made investors concerned. Now, my point on this is, okay, Oracle is being punished far harder for doing exactly what its peers are doing. Oracle is down 33% year to date, largely over these dilution and the taking on of debt. Google is up 16% at the same time. Meta is pretty much at the same price it was last year, and Amazon is up 10%. And this pricing gap is exactly where the upside lives. And guys, our next thing that we're going to discuss is the Capex dilemma, okay? And this is where Oracle has continued to be punished. So Oracle spent 56 billion on Capex in FY26, and at the same time, it only generated revenue of 67 or 68 billion. So this is just a very easy template I threw together here. It's not in depth, but I want to show you here, we have the annual Capex, right? Oracle is being punished for spending 56 billion. At the same time, Google is spending 185 billion, Amazon 200 billion, and Microsoft 190 billion. Now, the problem is when you compare how much Capex they're spending to the actual revenue they are generating. So yes, this is a bear thesis and there is some value in it. If you look at it, Oracle is spending 82% of total income, total revenue on this Capex build out. Google is spending 38, Amazon 25. You got to remember, these guys do have diversified revenue. And then Microsoft, who is also down about 10% year to date or year over year, is spending 63%. So the interesting thing here is that Oracle and Microsoft are both similarly being punished. So Oracle is making a proportionally bigger bet than any hyperscaler. More torque to them if it works, but more pain if it doesn't. So guys, this is exactly where I'm positioning because I like the risk-adjusted reward. More risk often means more reward. And here I believe Oracle are proportionally being punished. And I think there is a much bigger upside here for Oracle than all of the hyperscalers put together. Now guys, the debt argument, because look, debt is very important. And the total debt here has climbed to 156 billion from 87 billion just 2 years ago. And as a result, we have seen downgrades in the credit rating. S&P have downgraded Oracle to BBB minus back in July. Moody's outlook is negative, and credit default swap spreads are at record highs. But guys, let's play devil's advocate here, okay? And look at the alternatives. The alternatives is not to invest. Salesforce is down about 33% this year alone on fears of AI agents and replacement of its legacy software. The market is punishing standing still companies just as hard as companies that are spending aggressively. And here, leverage is the cost of staying relevant. And all of the best minds in the world, behind the best companies in the world, are pursuing this Capex play at all costs. So guys, the last bear case we will talk about here today, we addressed it earlier and it's the most prominent risk. Roughly half of that 638 billion backlog is tied to the one customer, OpenAI. OpenAI is a company burning through enormous amounts of cash, and it has never proven it can pay 60 billion a year every year for the next 5 years. And right now, its subscriptions are still loss-making. The user economics are not solved, and if OpenAI's funding gets shaky, Oracle's backlog story changes overnight. So this risk isn't about Oracle's execution at all. It's more so about whether Oracle actually bet on the right whale. But again, we have seen Oracle diversifying with new customers and expanding that backlog through new names like Microsoft, Amazon, and Google. So the company are working on it. And even without the 300 billion AI deal, even without it, if we want to play devil's advocate, the backlog is still at about 338 billion, 5 times annual revenue for a company with a market cap today of only 370 billion. So I firmly believe that Oracle is still undervalued even without the OpenAI RPO backlog. So guys, here's where I land and 5 reasons that I'm buying Oracle. It has the biggest contracted backlog across the Mag 7. Its growth and margins are outpacing the hyperscalers. Its customer base is diversifying well beyond the bear case of just OpenAI. It has a co-CEO who literally built AWS and is now trying to beat it. And lastly, its founder still owns 40% of the company with no intention of selling and Elon Musk is labeling him the smartest man in the world. And guys, while I absolutely love Oracle, to add some context and to be fully fair and transparent, here are my reasons that I am a little bit cautious. The layoffs may impact the company. The negative free cash flow cannot last forever, or there will be further dilution. Its Capex is nearly bigger than annual revenue. Its credit rating is coming down and shrinking. And the company has a backlog that is still half dependent on just one customer. But weighing all of this up, Oracle at $128 a share, a market cap of 370 billion, and a backlog that already guarantees a decade of revenue. I think this is as asymmetric as anything I've seen in this market. It's why BlackRock, Vanguard, and Ken Fisher are already in it. And it's why I believe Oracle can return 300 to 500% from here over the next 2 years. As always, this isn't financial advice. You have to always do your own research. But if you want to see our research papers, our price targets, and our charting, join us on the Patreon. We have a free trial option. And if you want more videos like this, hit like, hit subscribe, and tell me in the comments below, are you a bull or are you a bear on Oracle?